Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Friday, July 18th, 2014, and what we seem to have had today was a reversal day. Now, we didn't reverse all the losses from yesterday, but we certainly reversed most of them. I think the numbers around 82 or 83% of the loss from yesterday, or maybe even slightly higher, was regained today. So, everything's fine again. Pom-poms out, don't worry, be happy crowd. No problem. This is a process. And if not yesterday, if not today, then we just keep going one day at a time and we watch the market. We watch for our signals. Now, what's interesting is what I didn't do for the members is I did not issue a whole series of short plays. I had issued one, and that's fine, and we're in that trade. However, I was going to today based on what I saw in the morning, and what I saw in the morning was a market that was going to float up all day, and it was pretty apparent that yesterday was long forgotten. So what I decided to do was wait and watch the market play out next week, Monday, Tuesday, and so on, and see what happens. Now remember, a cycle turn doesn't have to be to the day, to the hour. It's a point in time when the market is going to shift. It could be off by a day, a week, even 2 weeks. Normally not more than that, normally not 2 weeks. But nevertheless, we're going to watch to see what happens, and we'll look for the correct signals. And just the straightforward signal that I'm looking for in the S&P is this is your daily chart, and this is yesterday's red bar down day, and I'm looking for a close below this day. Okay, if we get that Monday or Tuesday, then I think the game is back on. But until that happens, this is a bullish market. So let's not forget that. Let's go back to, you have to let the market tell you what to do. We can't impress our will on the market. Just because I think it's a cycle turn time and I think the market's going to go down and I think volatility is going to pick up doesn't mean it has to happen. It doesn't mean it has to happen today. This is the probability. This is what I believe based on my research, my analysis. It's based on things that have worked in the past and things that will work in the future. It may not work every time, but guess what? This is the beginning of what I think is a turn coming. So don't pin it down to a day. It's a process. So we'll see what happens next week. We'll see how it plays out. But I would expect to see some more volatility next week, and I don't think we're out of the woods yet. Although it's a bullish market, and if we just take a look at a weekly chart, it even accentuates it more. I mean, this is a strong market. There's no doubt about it. But, strong markets roll over. Remember, the market doesn't necessarily go down when people get bearish. It goes down when nobody's bearish because there's nobody else to get in. There's nobody else long in the market. So you want everybody in. You want them in the boat. You want them all on one side. And that's when they usually pull the rug out. Markets are designed to trick us. And that's why today it went back up, because it's designed to trick the best analysts out there. It's designed to trick the best traders out there, and it's designed to trick the general public out there, and nobody ever has a clue what's going on. We have to look for signals, and we do the best we can with the probabilities, and we're going to take it one day at a time, and we're going to add one short at a time when the pattern presents itself, when the analysis presents itself, and we're going to make money, and there's no doubt about it. We always do. We make money when the market goes up. We make money when the market goes down, and basically, I just want to let you know that what I sent out to members yesterday was an update on an existing trade we had, and then I said that we don't have a confirmation that the market is headed downward. Therefore, I'm not issuing trades until we do. I said aggressive traders can get into some of the S&P type trades and the futures trades if they want, and they know what to do. They simply put, and I'll show you what to do. They would simply put a stop above this high, and if they get stopped out, they get stopped out. And but in terms of individual stocks and shorting individual stocks, I said I would issue if we had confirmation that the market had made its turn. Well, we don't yet, therefore we're not going to take any risk until it does. So that's the way we play it, and that's how we roll over here. So Let's quickly take a look at the, oh, by the way, let's look at, I was going to look at gold, but let's look at the IWM. Talking and typing. Okay, IWM. Now, IWM was stronger than the S&P today, and it was stronger than the Dow today. IWM, which is the small cap Russell 2000 index, small business across America, that was strong. The NASDAQ was strong. So all the leaders on the way down were the leaders on the way up today. So the IWM was up about 1.5 today, or 1.5%, and the S&P was up about 1%. So that's significant in my mind because it was an outperformer. So we want to be aware of that because there's almost no doubt in my mind that we're going to test this moving average here, the 50-period moving average, and then we'll see what happens. But this is still a weak market. And, but we're watching it. But so one day at a time, it was a strong market. In fact, if you look at the intraday, you'll see what happened here. This is yesterday, and then we start right here today. We just took off, right? We took off, and then we went sideways the rest of the day. And after a sideways pattern, what happens? Usually another up move. So let's look at the hourly chart. And what do we have in the hourly chart? We have 3 bars up. We have sideways, right, for a few hours. And so it wouldn't be surprising at all to see another pop up on Monday. That is certainly in the cards. In fact, that's actually a almost a high probability trade right there that we're going to go and I don't know how high we'll go yet, but I'm going to do some work on that this weekend and see what we come up with. Anyway, let's move over to the gold market. I get a lot of questions about gold, and there's a lot of members itching to get into the gold trade, and some are in it already with the GDX especially. So this is the 60-minute chart. Let's move over to the daily chart. So the same scenario continues to play out for gold, which is we had the big up move. Now we're chopping around, right? We had a big down move the other day, chopping around. So I think that another week or so of this, and gold's going to take off to the upside, and that's what we're looking for. I keep saying that, well, because the pattern keeps playing out that way, and we'll see what happens when it does. But especially as long as we stay above this line here, okay, above this low from this day, which is 124.36 on the GLD, as long as we stay above that, I think that we're destined to go higher. However, if we come and fill this gap here, both hands. You got to buy with both hands down here. Don't do that. Never more than 10% of your swing trading account in any one trade, but that's a figure of speech. Buy with both hands, because this would be a great bounce opportunity, and then I think we would actually take off from there. And we would be out here somewhere, so that would be a long sideways move, and then we would take off, and that would make a higher low, and you would have this low, and then a higher low out here, and boom, then we would take off. I'm pretty damn sure of that one. So that takes care of gold. Let's move over to the USO and take a gander at oil, see what we've got. Oil's bouncing up, and I still suspect we're going to make another high in oil up here, and maybe even $40 in the USO, and translates to about 109 to 110 in the crude contract. So I think if we have another couple of sideways days here, okay, that'll set up for another move higher, just like we saw in the other chart there. So you have an up move, sideways, and then another up move. And that's the way markets tend to move, folks. Markets move in waves. So wave 1, wave 2, wave 3, or on the downside, wave 1, wave 2, wave 3, wave 4, wave 5. That's the way markets move, and that's kind of taught in the Elliott wave theory, which I'm not necessarily a huge fan of. I think over the longer term it's okay, Elliott wave analysis, if anybody's familiar with that, but in the short term, the Elliott wave analysts will change their view constantly based on what happens every day, and that's fine. You're supposed to change your view as an analyst when things change, but the problem is they seem to kind of get locked into a pattern, and then they have to change everything, and I don't know, it just doesn't seem like it works that well. But that's my opinion. Nothing against the Elliott Wave guys. They're good guys. Anyway, you know what? I think we're going to have a wrap tonight. It's Friday evening, and we'll probably have some more stuff over the weekend as I pour through some of these charts and do some some work and analysis preparing for next week. So my guess is I'll probably put out a video or two, maybe a single stock. I actually have an idea of a really, really weak European bank stock that looks like a disaster, and I think the disaster is actually just getting started for the most part. So I might put something out on that, and we'll see what happens. Now I kind of locked myself into it, so I will. But nevertheless, this is David Frost, MyStrategicForecast.com. Thanks for tuning in, folks. Common sense market analysis.